Welcome to Conversations on the Future of Democracy, a series sponsored by the John W. Kluge Center at the Library of Congress. I'm John Haskell, director at the Kluge Center. Today we will discuss social policy in the wake of the pandemic. We're joined by Andrea Campbell, who is the Arthur and Ruth Sloan Professor of Political Science at MIT. In 2019, she was in residence at the library with the Kluge Center as the chair in American law and governance. She specializes in public opinion and political inequality, particularly their intersection with social welfare policy, tax policy, and health policy. Andrea is the author of numerous articles and several books, most recently, Trapped in America's Safety Net, One Family's Struggle. Welcome back to the Library of Congress, Andrea. It's good to have you back.
Well, thank you so much, John, and thank you for the invitation to join your speaker series. I look forward to it.
Well, we're going to hit you with the hard questions right at the start. What characteristics of the safety net in the U.S., as well as social needs we have, does the pandemic expose?
Well, when I think about the U.S. safety net and social policy system with regard to the pandemic, there are three characteristics that come to mind. One is that the U.S. social policy system is really a hybrid public-private system, which is to say that, as regarding the private piece, many programs that are run by governments in other advanced industrialized nations are handled privately by employers in the U.S. Now, this means a couple of things. One is that if you lose your employment, you lose your benefits. So we've seen people during the pandemic face the double whammy of job loss and losing, for example, their health insurance. The other thing is that employers are not required in the US to offer such benefits. They're completely optional. And so some people during the pandemic had paid sick leave, for example, but many did not. And so the pandemic has really revealed that component, the implications of the fact that much of our social policy is handled privately by employers. So that's the first point. The second point, or second characteristic, is when we turn to the public programs themselves, especially the safety net programs that are aimed at lower income Americans or people who've experienced a loss of income, like unemployment, there are a lot of rules and very tight eligibility and many administrative hurdles. It's really difficult to qualify for these programs. They typically have very low income and asset limits, for example. It's often difficult simply to sign up. You have to provide a tremendous amount of documentation to prove that you're eligible. And there are administrative burdens. Those were amplified during the pandemic when many people, for example, tried to access their state's unemployment computer systems, which crashed with the volume. So the administrative burdens beyond that, the length of the applications and so on, is quite pronounced. And then the third thing about American social policy is that many of these income-targeted programs, mean-tested programs, are either waitlisted or capped in some way, and they can't ordinarily expand during a recession. So think about unemployment insurance. There was a federal add-on benefit this time around in the CARES Act that was passed in the spring, adding $600 to the basic unemployment benefit. That was important because state unemployment insurance benefits are relatively low. They average $385, and they can be as low as $215 per week. But that program can expand. What's interesting is we haven't heard anything about cash welfare, TANF, the Transitional Assistance for Needy Transitional Assistance for Needy Families program, being used by people to offset joblessness and other needs during the pandemic. And we haven't heard about people using, say, housing vouchers if they're having difficulty keeping their housing. And the reason is that TANF and housing vouchers are limited. They're capped. They simply can't expand during a recession. So that's a third aspect of American social policy that's really relevant during the pandemic. And then when we turn to social needs that are exposed, we can get into more detail about this in a moment, but there's several that really stand out to me. One is that about half of American households have virtually no savings. And we've known for a long time that millions of people live paycheck to paycheck. But now that we've seen tens of millions of people lose those paychecks suddenly overnight, the implications of the thin margins on which many Americans live has become really very clear. And of course, lack of income leads to other forms of insecurity, food insecurity, housing insecurity, people, because people are falling behind on their rent or mortgage. And this pandemic has really profoundly affected people's ability to meet their ordinary needs, their very basic needs of food and shelter in a very profound way.
What needs that have been exposed by the pandemic, if any, have been addressed fairly successfully, either through programs that exist or through changes and innovation in social policy?
So 2 big relief bills were passed in the spring, the First Families Bill and the CARES Act. They generally contain short-term measures, some of which are going to expire at the end of July, but they made changes both to existing programs and included some innovations that have really helped people during these past few months. So in terms of changes to existing programs, the unemployment insurance system is the prominent example. The CARES Act did several things. One is that it extended benefits for 13 more weeks for the unemployed. It also added this federal benefit that I mentioned before, the extra $600 per week. And then interestingly, it expanded eligibility. Normally, many Americans are not eligible for unemployment insurance, even if they've lost their jobs. Part-timers, gig workers, freelancers, people who are independent contractors, they're not normally eligible. And all those people were allowed to file for unemployment under the CARES Act. In terms of housing, the CARES Act included a federal eviction moratorium for housing that has some kind of federal backing. So for rental units that are part of the Federal Housing Administration or rental units that were financed by Fannie Mae or Freddie Mac, there is a moratorium on evictions, but that expires late July as well. And then a number of cities and several states have passed their own eviction moratoria. Those bans, in some cases, expire at the end of August, some in October. Some are linked to the state's emergency declaration around the public health crisis and it expires 60 or 90 days after the end of that declaration. So housing needs have been met, at least in the short term, preventing evictions. There's been an expansion of eligibility and benefits and cutting of red tape to facilitate access to these programs. So one example are school lunches. Many families were allowed to pick up free school lunches during the spring and summer without having to prove their income eligibility. That's a way of cutting an administrative barrier that eases access. That provision will expire in the fall as well, unless either the Department of Agriculture or Congress decides to extend it. Keep in mind, about half of all school children get free lunch to begin with, but this was a way of just facilitating access to this program. And then food stamps. The Families First bill, the first relief bill, or the earlier one, allowed states to streamline the application process for food stamps as well. The official name is SNAP. That bill also increased everyone's benefits to the maximum. Normally, food stamp benefits are indexed to your income, but this law allowed states the option of giving everyone the maximum. It didn't increase the maximum, as happened during the Great Recession 10 years ago, but did allow everyone to get the maximum. And the other thing that the First Families Bill did was, ordinarily there is a limit on how long people under 50 who are unemployed, who don't have children, can get food stamps. Ordinarily, they can only get them for 3 months, and that time limit was suspended. So those are all changes that were made in these relief bills to existing programs. And then interestingly, there were a couple of new things, a couple of innovations. So one was, as many people experienced, the one-time relief payments, the one-time cash payments. That was in the CARES Act, where Congress approved $1,200 payments for adults and $500 for children under 17, using certain household income caps, and also utilizing the IRS as the way to get these payments out to people based on their 2018 or 2019 federal taxes. And then, interestingly, there was paid sick leave introduced temporarily for certain workers working for companies of between 50 and 500 employees, very specific, but the law does grant 2 weeks of paid sick leave and 12 weeks of paid family and medical leave for people who work for such employers. Again, that's temporary, and we'll see if it gets extended if the pandemic continues. So those are some of the changes that were made both to existing programs and then some new policy changes that were made in light of the pandemic in these relief bills.
I think it would be helpful. We're taping right before the end of July, and our viewers will see this in early August. Could you just do you mentioned, I think, 3 or 4 areas that were scheduled to expire at the end of July. We, of course, don't know how, when we're speaking, we don't know how Congress and the president will act. Could you just give a quick summary? What are those things you're looking at that are set to expire? You had said unemployment insurance, and there were a couple of other things.
Sure. There's unemployment insurance. The additional $600 is set to expire, as well as the moratoriums on evictions, and the paid sick leave, I think, is due to expire as well, though I'm not sure exactly when that is expiring. So these will be pieces of the original relief bills that Congress will be contemplating extending or not. At the moment, for example, there are negotiations going on between the Democrats and Republicans. There's some push to extend the unemployment, the extra federal add-on to the unemployment benefits, but possibly reduce the amount from $600 to $200 or $400. So we will see in July, August, what the results of those negotiations are.
Yeah. And so when you talked about paid sick leave, for example, are there other areas in which the U.S., perhaps unlike a lot of advanced democracies, really doesn't have a national social policy? What other areas are in that category that, say, compared to some European countries? Oh,
sure. There's a number. So one area is family medical leave. We have an unpaid system at the federal level. So since the Clinton administration, workers can take up to 12 weeks of unpaid leave to care for a family member, to care for a new or adopted child. If they themselves are sick, they can take leave, but it is unpaid. So many people who are eligible don't use that provision because they can't afford to go without the paycheck. And it's also limited in scope. Only about half of American workers are eligible for that program, because it's all based on how many hours you've worked over the past year, the size of your employer. So other countries have paid family medical leave kind of built into their social policy systems, in addition to the paid sick leave that we talked about before. Another big area that has become apparent during the pandemic is care for children under 5. Of course, we have public K-12 education, but we don't have universally provided daycare or pre-K, the sort of infant to age 5 set. There's no publicly available programs on a widespread basis. There are some means-tested programs for low-income children. There are some programs that are run by nonprofits through community block development grants, for example, but there's nothing universal. And what's become apparent during the pandemic is that most childcare is offered privately by people in their homes or by small businesses. And during the shutdown orders, that created a very precarious moment for very many childcare providers. And so one question is whether these providers will be there when parents do need to go back to work. It's a huge issue for workers called back to work. We've seen it already with frontline workers searching for childcare. We may see it in the fall with K-12 teachers who have young children who are wondering how to care for their children and teach their classes at the same time. As we all know, we don't have universal health insurance in the United States. If you lost your job and you're looking for insurance, you could go to an Affordable Care Act marketplace. There you could find out whether your income would qualify you for Medicaid. It's more likely to do so in a state that has expanded Medicaid under the ACA, which is now 37 states, 13 haven't yet. Or you may qualify to purchase insurance on the marketplace, the ACA marketplace. But there are some holes there. If you happen to live in one of the states where Medicaid has not been expanded, you may fall in what's called the coverage gap, which is that your income is too high for Medicaid in that state, and yet not high enough to qualify for the subsidies for private insurance plan purchase on the healthcare exchanges. There's about 2.5 million Americans who fall into that coverage gap. Also, I should say that during the pandemic, Congress mandated that private insurance companies pay for testing of COVID-19, but not for treatment. And so if you have health insurance from whatever source, you are still on the hook for whatever deductibles, co-pays, other out-of-pocket expenses that you may have if you do come down with COVID-19 and need treatment. whereas other countries have universal healthcare insurance. And then I should say there's two areas where we don't have national policies that other countries do that have made it administratively difficult to conduct some of the extensions of benefits that were in the relief bills. So, for example, the United States does not have child allowances. Many other rich industrialized nations have child allowances where families with children get a monthly payment. If we had a law like that, it would have been easier to administer the one-time cash relief payments that came out through the IRS. We used the IRS because that was the only means of getting people money, because we didn't have any other pre-existing way through which the government regularly disperses cash to households. So it just made it more difficult to carry out that policy.
Yeah.
And then the other thing that we don't have in the United States that is common in Germany and is being contemplated in some other countries like Sweden and the UK are something called short-time work policies. So if employers need to reduce hours during a recession, there's a program in Germany where the government picks up a portion of the lost wages and pays those to the workers. So compare that to the small business paycheck protection program that was passed by Congress in the spring. That is a program that small businesses can apply to, and they get a loan, which can be converted into a grant if they use the money for payroll and they keep their employees on the payroll. And two difficulties was that it was administered by the Small Business Administration, which has long been in the business of giving grants to small businesses, but the volume of this program was so much greater. Their computer programs were overwhelmed as well, as were the banks through which the program was being administered. Again, if we had this sort of short-term work policy in place, it would have been more direct, more simple to aid small businesses in the way that Congress wanted to. So there's lots of ways in which we don't have certain policies in the United States that either leave certain aspects of people's needs unprotected or just complicate the administration, even when Congress does want to help people in need.
So, as you well know, Andrea, with the Black Lives Matter movement, there's been a lot more attention to racial and ethnic disparities, and here you've described a whole raft of social policies meant to address issues connected to what appears to be a fairly extended recession. How are those racial and ethnic disparities reflected in what's happening in the implementation of our social policy?
Well, that's a great question. I mean, social scientists have known for a long time there are a number of disparities, economic disparities, health disparities that disproportionately affect Black Americans and Latino Americans. And I think that's all been put on full display for everyone during this pandemic. So Black Americans, Latino Americans have been hit harder by the pandemic in many ways. They've experienced higher rates of job loss on average than white Americans. They have, in part because they were more likely to be employed in the economic sectors that were hardest hit by the shutdowns. They have less ability on average to weather a loss of income because they have, prior to the shutdown, experienced lower wages on average and have much less savings and wealth. And then they've experienced greater exposure to and deaths from the pandemic and from the virus itself for a variety of reasons, including employment in high-risk occupations, less access to healthcare, more underlying health conditions that increase susceptibility. And so in terms of the social policy vulnerabilities that we've really seen, one is in health insurance. Many racial and ethnic minorities live in non-Medicaid expansion states. So they are among the people who have lost their health insurance from their job. If they were to go and inquire on an ACA marketplace about the availability of public insurance or private insurance that's subsidized, they might find that they would be qualified for Medicaid if they lived elsewhere, but not in their particular state. Also, in terms of uninsurance and many other programs, many Black Americans and Latino Americans live in states that have particularly high administrative burdens and where the computer systems have been the most impacted by the crush of people applying, where the applications themselves are the longest and the most difficult to get through. And then we also, we noticed that Black Americans, Latino Americans have had a more difficult time accessing some of the help that Congress passed. For example, those one-time payments, the $1,200, the $500, it is harder to get those payments, or there might be a delay in getting those stimulus payments if you don't have a bank. Because the most direct way is that you file taxes, the IRS already has your banking information, that was the direct conduit. If you don't have a bank, you had to apply through a separate system, which took more time. And also, we've seen that small businesses that are owned by Black Americans and Latino Americans didn't have the same kind of relationship with bankers that would facilitate applying for the Paycheck Protection Program that the Small Business Association was running. And so many small businesses owned by racial and ethnic minorities weren't able to access that program, especially in the beginning. So those businesses might be more likely to close in the future as the pandemic proceeds. So we see both greater need on the part of many racial and ethnic groups, but also more difficulty accessing the programs that might be able to help.
So one thing I'm curious about, going back to the conversation when you described innovations in social policy, and even a few things that were brand new in terms of government action at the federal level, what do you think might be lasting? So now we're getting into the speculative realm of the conversation, where you have a chance to speak to what you think of what has happened is going to be lasting, either in the expansion of a program or a change in a program or a new program.
Well, it's going to be fascinating to see, based on both past patterns and the magnitude of this crisis, this public health crisis and economic crisis. So when I think about what is likely to be lasting, I think about what are the underlying characteristics of American policymaking that have either changed or not changed in light of the pandemic. So one is that most policymaking in the US is pretty incremental. We don't tend to adopt big new programs very often. Usually we tweak existing programs a little bit. Big structural changes are pretty rare. And I think also about, are we just talking about changing components of existing programs or creating new programs? It's more difficult to create new programs in areas where government has traditionally not been involved. And then another thing I think about is, what kinds of programs have allies beyond the recipients? So what kinds of programs have other actors, like hospitals regarding health insurance, or maybe agriculture regarding the food programs? Because that might be an indicator about what programs have more public support and more groups pushing for their extension or their permanent adoption. So think about food programs. I think expanded eligibility for, say, food stamps, something like that might survive because it's just an extension of an existing program. Or it might be more easily invoked next time there is a recession, even if the next recession hopefully is not as catastrophic as this one. Also, food stamps have allies. Agricultural sector is a big ally of the food stamp program. Grocers are an ally. So that's a program where I think we might see some permanent changes. But again, it's going to be more about increasing the scope of an existing program as opposed to adopting a new program. Thinking about Medicaid. So Medicaid was not part of the pandemic relief bills, but Medicaid is implicated in the pandemic because it's a public health crisis and a health crisis. What's interesting is Oklahoma voters just a few weeks ago, or earlier in the summer 2020, approved a constitutional amendment to expand Medicaid in their state. So that's the latest state to have Medicaid expansion. And it seems like pandemic conditions helped motivate that vote. So it's possible maybe expansion will come to other states more quickly because of the pandemic and the obvious need for health insurance coverage that the pandemic has exposed. Then there's unemployment insurance. So as we talked about, three things changed: the increased duration, the increased benefits, and then adding new categories of workers. Well, duration increases happen all the time. Congress regularly does that during recessions, so that will continue in the future. Congress usually doesn't augment the benefits, especially not by a whopping $600 a week which, as we saw, is far greater than the typical state benefit. It's hard to imagine that in normal times that federal benefit would continue, especially since we're talking about reducing that add-on even now as a pandemic continues to rage. What's interesting is to think about the extension of unemployment insurance to these new categories of workers. So on the one hand, this would be a very welcome update to unemployment insurance, which has not really changed since the 1930s and was designed around a completely different economic system where people typically had a traditional job full-time with a given employer. And obviously that's changed very much over time, precisely because we have so many freelancers, gig workers, and so on. So one question is, are we going to see this continued extension of eligibility? And that, I think, is a tougher ask because the allies aren't necessarily there. Companies like Uber have fought very hard against, say, the state of California to not have their employees categorized as regular employees, so they don't have to pay things like the unemployment insurance tax to the state. Or UPS drivers, many are now considered independent contractors, not regular employees. And so there's a number of companies that have explicitly used this independent contractor model to avoid paying things like the unemployment insurance tax. So it's a little more difficult to see that is something that's going to continue in the future. So we'll see what happens with these extensions. I think a lot of it depends on whether there's some other force in society that thinks it's a good idea that we've made some of these changes and extensions of social policy, and once it's even continued. If not, I think these are going to be temporary measures during this extraordinary time.
You're a political scientist, so we'll put on our political analyst hat. I think it's interesting that in a time of really marked political polarization, infighting, fighting between the parties at levels that's not that common in U.S. history. Certainly not levels that are greater than any time in maybe 100 years. Yet people, given the scope of the calamity, the parties came together, and there's quite dramatic legislation has been passed. We're taping before the end of July. There's likely to be another one by the time this tape airs. So I guess the political question that flows from looking at that is whether this particular recession and this particular crisis is bad enough that you would think that whether there's changes in people's views towards social and economic policy, whether there's going to be any lasting changes, whether the populace will become more open to more government, or will things revert to where they were before the crisis. What are your thoughts on that?
Yeah, when I think about public opinion and what might happen in the future, I think about two components. One is, what are the underlying patterns in social policy that predate the pandemic and might affect what happens afterwards? And then also, what happens in public opinion during recessions? Like, what's the evidence from previous recessions? So in terms of the underlying pattern, Jim Stimson, who's a political scientist at the University of North Carolina, talks about the public mood, which is that if you look at the public as a whole, over time, it oscillates in more liberal and sometimes more conservative directions, sometimes for more expansive government, sometimes for more limited government. And you might wonder why this oscillation. Part of it is that most Americans are pretty moderate. If you ask people to array themselves on a scale from liberal to conservative, most people will lump themselves up in the middle. And so we have this kind of, not quite a normal curve, but close to a normal curve with many people in the middle of the spectrum. And yet we have two political parties. And so the way that a moderate public gets moderate policy is to kind of toggle between the two parties. And so if you look at things like presidential election results, we tend to go back and forth between Republican and Democratic presidents pretty regularly. And how this relates to the public mood is that people will elect a president. That president will start implementing policy, whether he's more liberal or more conservative, someday a she. And as those policies are being implemented, let's say it's a Republican who's been elected, people look at those and think, well, I know that's what we said we wanted, but we don't want quite that conservative. And public opinion starts going in a liberal direction. And then at the sort of peak of the liberal direction, a Democratic president is elected, starts implementing policies that might be more liberal. And then the American public says, well, even though we elected a Democrat, those policies are a little more liberal than we really wanted. Now we'll start tacking in the conservative direction. And so you see this oscillation back and forth. So right now, in this particular political moment, we've had a Republican president, we've had a Republican Senate, and the public has been moving to the left. So that would seem to suggest maybe there's more support right now for more expansive government, perhaps a continuation of some of these pandemic-related policies. Perhaps public opinion would be open to those kinds of changes until they start being implemented, and then the public might change its mind. So that's the underlying pattern. Well, what about other recessions? Well, it's interesting. The experience is contradictory. So people in previous recessions who have themselves faced some kind of crisis, job loss, health insurance loss, that kind of thing, tend to move in a more pro-government direction. Having personally experienced some kind of crisis, they are more supportive of some kind of government help. But during recession periods, if you look at the public as a whole, only a minority have had that negative experience, and the public as a whole actually tends to go in a more conservative direction. There's a kind of circling of the wagons. There's less trust of government. There's less willingness to sort of let government try new things, expand into new areas. Less willingness to sort of take a flyer on government action. And so overall, during recessions, public opinion actually becomes less expansive in terms of government role. So this pre-existing evidence is pretty mixed, which then leads to the final question is, well, is the pandemic different? Is the scale of this recession, the worst depression, it's not officially a depression yet, but the worst recession that we've seen since the Great Depression of the 1930s, is the scale of job loss and economic location large enough to really shift the needle? Well, I guess one thing to keep in mind, and I'm going to make political scientists sound like pessimists, is that even if public opinion were supportive of big structural changes, which is a big if, public opinion is not the only ingredient in American policymaking. The policymaking process is, in fact, very permeable to organized interests. And so who's organized? Well, business interests are organized, and they have a very strong interest in not paying, say, higher unemployment taxes for more expansive benefits in the future, or not paying unemployment taxes for independent contractors to be eligible indefinitely. Other groups in society that are highly organized or more affluent Americans who may have a strong interest in not paying higher taxes to fund more expansive social policy. So I'm not holding my breath that the pandemic, as severe and cataclysmic as it has been, is actually going to change the underlying nature of American social policy very much. So I think we're not going to see big changes. I think we're not going to see those $1,200 stimulus payments turn into a new program of universal basic income. That's too big a change for American politics. But maybe we'll see incremental changes in existing programs. So for example, maybe it will become the case that the duration of unemployment insurance or the fact that there can be a federal add-on, maybe that becomes automatic during future recessions. Instead of Congress actually having to take a vote on extending the duration or increasing the benefits, maybe it just becomes an automatic thing tied to economic conditions. And if unemployment rises above a certain number, then that automatically happens. So I can imagine that there could be changes of that type that would be more incremental and more building on existing systems as opposed to introducing new systems that we've never seen before. Or imagine that it's hard to get national paid family medical leave. That's, again, would be a pretty big policy lift, but perhaps we'll see tax credits pass. In American politics, precisely because of the polarization you cited, it's really hard to pass new big spending programs, But tax credits, tax breaks are something, are a policy tool that are easier to achieve on a bipartisan basis. So you might imagine that some tax breaks that extend some of these needs that we've noticed and have been exposed during the pandemic, like the need for paid family medical leave, perhaps there'll be a system of tax breaks for that in the future. And then the difficulty or the issue will be, can we design those tax breaks to make sure that the help goes to the people who need it, and not people who probably can afford to self-insure or get through a caregiving episode and so on. So I think that's the nature of the change we're going to see as extraordinary as this economic crisis has been. It's pretty hard to move the lever in American politics. It's a system that's set up for slow changes, not big, non-incremental changes, and I think that's unlikely to change very much, even given these conditions.
Yeah, and that's certainly a worthwhile insight to finish with as we've run out of time. Andrea, we really very much appreciate your joining us and sharing your thoughts on social policy in this very difficult time. And certainly we at the library wish you and yours the best. And we hope to see you again soon when the library opens up.
Thank you very much. And the Library of Congress is a remarkable institution. All Americans should be incredibly proud of it. So thank you so much for having me join your series of conversations, and best to all at the library and to all my fellow Americans.
We appreciate your plug. All right. Thanks, Andrea.